Hello and welcome. This is the Global Reset with me, Prashant Nair, where we unpack the moves that matter across policy, power, and markets. Fewer alliances have soured as rapidly as that of Donald Trump and Elon Musk. Almost inseparable over the last few months, the two decided to part ways a few days ago. Before we delve deeper, and we will, into the implications of this on markets and policy, let's first hear out from the man himself, U.S. President Donald Trump.
Look, Elon and I had a great relationship. I don't know if we're well anymore. I was surprised because you were here. Everybody in this room practically was here as we had a wonderful send-off. He said wonderful things about me. You couldn't have nicer. Said the best things. He's worn the hat. Trump was right about everything. And I am right about the great, big, beautiful bill. We call it a great, big, beautiful bill because that's what it is. But I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here, better than you people. He knew everything about it. He had no problem with it. All of a sudden he had a problem, and he only developed the problem when he found out that we're going to have to cut the EV mandate because that's billions and billions of dollars, and it really is unfair. We want to have cars of all types. Electric, we want to have electric, but we want to have a gasoline, combustion. We want to have different. We want to have hybrids. We want to have all. We want to be able to sell everything.
You know, let me take 2 minutes and explain to you what happens when two of the most powerful, polarizing, and maybe some would say unpredictable figures in American sort of political and business scene turn on each other, right? I mean, president of the world's largest economy, the most powerful country, and of course, world's richest man who controls SpaceX, launches their electric vehicles, political discourse, of course, on his own platform, X. The gloves are truly off. Let's start with, of course, President Trump. He really opened the salvo with a sharp dismissal, calling Elon Musk crazy, claiming he personally told him to leave and framing Musk's outrage as little more than a tantrum over lost federal support. Trump's words, Elon just went crazy, that's the quote, after the EV mandate was scrapped, but there was more than insult in tone. There was injury in sentiment as well. Trump said he was, and I quote, taken aback, remarking, I've aided him significantly. Elon and I had a fantastic rapport. I can't say if this will continue. End of quote. That sense of betrayal quickly turned into acquisition. Trump alleged that Musk had full visibility into the legislation, as you just heard, and voiced no objections. The quote, of course, he knew everything about it. He had no problem with it. End of quote. Then came the fiscal threat. He posted on Truth Social that the easiest way to save billions would be to tear up government contracts with Musk's companies. The quote is, I was always surprised that Biden didn't do it. He added almost as a taunt. And finally, Trump got to the heart of his frustration. Subsidies. He suggested Musk is furious simply because the EV tax credit regime is being wound down. The quote is, they are struggling, the electric vehicles, and they expect billions in subsidies. Elon knew this from the outset. End of quote. In short, Trump's narrative is transactional. The relationship soured, he says, when the financial incentives ended. Well, but if Trump's tone is clipped and combative, Musk's response is blistering. He began by calling out what he claims is outright fiction. And he says, this bill was never shown to me, not once, and was passed in the dead of the night so fast that almost no one in Congress could have even read it. End of quote. A direct rebuttal and an implicit charge of kind of backroom politics here. Then, with his signature flair for provocation, Musk flipped the script, claiming Trump owes him the presidency. He said, without me, Trump would have lost the election. The Democrats would control the House. Republicans would be 51-49 in the Senate. End of quote. What followed was both personal and pointed. Such ingratitude. That's the quote. Musk posted an icy response from a man who clearly feels betrayed. But the escalation didn't stop there. When a user floated the idea that Trump should be impeached and J.D. Vance should replace him, Musk replied with a crisp, unambiguous yes. Well, and then the explosive charge of all, Musk claimed Trump's name appears in the sealed Epstein files, and that this is, the quote is, the real reason they've never been released. No documents, no follow-ups, but basically a grenade launched into this fight. And as for Trump's threat to cancel contracts, Musk didn't flinch. He declared that SpaceX would begin decommissioning its Dragon spacecraft immediately. It's a dramatic, if likely symbolic response at this point in time. We'll have to see how this goes. We've got other people now sort of coming in as well. And we, this morning, Asia hours, heard from J.D. Vance on Twitter. And he basically said that President Trump he came out in support, as you can read on the screen there. He came out in support for President Trump. No mention of Musk, mind you, but throwing his lot in, of course, with his boss, President Trump. So a lot happening, a lot to take in, but this is where we stand right now. Well, it's a political theater. It's really explosive out there. But what does it mean as we track markets, as we track policy? Because remember, this is not any White House. This is the White House under President Trump, which is trying to do things, change things which have not been changed for the last, many decades now, right? Tariff policy, trade policy, America first, bring factories back. So it's all up in the air, lots of balls up in the air. Leif Eskesen is now joining us. He's chief economist at CLSA, and he's with us to sort of talk about some of this and, of course, other stuff as well. Leif, great to have you with us here. It's a pleasure.
Likewise, good to be here.
Leif, so, sorry for that long sort of preamble, but let me come to you now. What is the, what's the implication from a financial market, a policy signal perspective? How do you read this?
Well, I think, first of all, we have to recognize, right? These are two gentlemen that both have a pretty significant ego, right? And I think the question is, as quickly as it has heated up, this debate, it could also relatively quickly, should we say, cool down, right? Musk has already, should we say, reached out with an olive branch overnight, and so it could potentially cool down. But nevertheless, right, I think one of the ways this can have an implication, right, is related to fiscal policy, right? So one big issue that Musk has with Trump's big beautiful bill is essentially it is not cutting enough back on spending. Of course, there was something close to his heart when he was day-to-day manager, should we say, of Doge, right? But he's not anymore, right? But he doesn't think that the budget is ambitious enough on that front. And also, more broadly speaking, the deficit implications of the bill, when you also factor in some of the additional tax cuts that are there, right, I think also is a concern from him, right? So if you think about the fact that he has been, and we'll have to see, will continue to be a big donor for the Republican Party, not just at the broader, should we say, national level, but also getting involved in particular districts, etc., right? Considering that we have midterm elections coming up next year in the U.S., you could potentially see some of the Republican hinterland being maybe a bit concerned about losing support from a big donor. And given his views on the fiscal side of things, maybe that could garner more support for maybe additional cuts in spending than what's currently in the big, beautiful bill, some push for that within Congress. Maybe some, should we say, scaling back to some extent of some of the additional tax cuts that's also embedded in the bill, right? So on the fiscal front, those could be some of the implications of that. So we don't have a fiscal budget that is, should we say, as loose next year as it would otherwise be. In addition to that, I would also say, if you think about what Musk has been saying in the past about tariffs, right? So also not a big fan of that. And I think the more titans of corporate America we see out there, not just Musk, but we also seen others, right? Talking about the adverse implications for their companies, for their sectors, for the broader economy of tariffs. That's also something that, again, on the margin, maybe can help, should we say, soften the stance to some extent when it comes to the Trump administration's approach to the ongoing trade negotiations they have with a bunch of countries, right? So maybe also on that front, it could on the margin move it in that direction, right? So I would sort of say in terms of implications for policy direction, at least directionally push things in the right direction, right? But will it have a big wholesale implication for Trump policies? Probably not.
So two things, right? And correct me if I'm wrong. You're saying that most likely they will make up. I know it's a tough one, but most likely they will make up. Both sides will have to give some and climb down a little bit. That's the way to read it, you think, Leif?
So I'm not in the mind of those two guys, but at least you can say that Musk has now reached out with an olive branch, right? And the question is, will Trump take that, right? I mean, so I would certainly expect some de-escalation from the heated back and forth we had over the last few days. I don't think it's in the interest of either side. I mean, Trump or Musk, right, to continue along those lines, right? But as I said, they both have big egos. I mean, they respond quite quickly to things. So we could potentially get some cooling off, right? But this has also gotten fairly personal, right? And it's something that will sting in some respect, right? So let's see how much we crawl down from current levels, right? Probably there's been some element of permanent damage here, but the question is how much.
Yeah. Life, if this festers and continues like this, right? From an outside world perspective, US is one, but this White House is trying to negotiate all these deals and rework how things have worked in a big way. Does this weaken the hand of President Trump and the White House in general, and sort of put other trading partners in a more advantageous position? What is your sense?
I mean, I don't think this specifically. I mean, as I mentioned earlier, I think it could. I mean, as I said, the more voices you have from corporate titans, right, that are pushing back at this sort of more aggressive tariff strategy, right, and are warning about the broader macroeconomic implications, but also the sector implications of these tariffs, right. The more people you have from that side of the spectrum talking out against that, it could, on the margin, as I said, soften the stance of the Trump administration in their negotiations with other parties, right? But I also think the sort of, should we say, the tariff strategy as an ideology runs deep in the Republican Party with Trump and with other advisors as well, right? So I don't think it's going to lead to an U-turn on that front, but maybe a somewhat more, should we say, constructive dialogue in the ongoing negotiations with other trading partners, right? So again, on the margin, it could soften the stance a little bit, maybe move us on the margin a bit more forward on some of these trade negotiations, right? But again, it's not going to stop them. It's not going to reverse them, but it could sort of add a little bit of reality check to the ongoing debates.
Got that. Let's just get some of the, let's move away from Trump and Musk and the implications there to some of the other stuff now. A few things. One, according to you, where will tariffs settle at? Will it be, I mean, the consensus is at least 10. Some say it could be between 15 and 20. Some say it could be 25. Where will they finally settle in your expectation, average effective tariffs? Are sectoral tariffs coming? Any particular sectors which are top of mind in that sense? And will the courts and the court system in the US will be able to sort of, block it? Or you think, I mean, there are enough avenues available, different sections through which, I mean, they'd be able to push these through. Go on.
Yeah. I mean, so I think if we start with the courts first, right, we'll have to see where that ultimately ends up, right? So for now, the existing tariffs that were introduced this year are kept in place up until June 9th, I believe it is, right? And then we'll have to see whether the district court allows for further extension of existing tariffs. And if they don't, then it would have to go to the Supreme Court potentially, right? Initially, there could be an extension there while litigation is ongoing, right? So that needs to be resolved, right? If it does get resolved, right, and then we can continue, should we say, along the lines of what Trump has been pursuing so far, including by introducing tariffs on a sort of an emergency basis, right? I mean, then our view is that tariffs, more broadly speaking, are probably going to end in terms of cross-country tariffs would be 10%. China, probably higher than that, maybe 20 to 30% is where we might land on that front. We already have, of course, sectoral tariffs in place when it comes to aluminum, steel, and autos, right? I think they will remain in place in part or in whole, depending on the country, right? So there could be some countries, say, like Korea, like Japan, of course, where exports of autos is very important, where they could potentially get some reduction in those tariffs in return for them, should we say, stepping up investments in the US, etc. Right? So there could be some negotiations around that, but otherwise, as I said, some of these sectoral tariffs will remain in place in part or in whole. Additional, as you mentioned, where could that be? I mean, so now there's ongoing, should we say, investigations into tariffs like on pharmaceuticals, on semiconductors as well. So I think we'll also have to see where that ends up. In some respects, you can say if the courts are not going to rule in favor of the Trump administration, then I think, of course, the probability of them relying on other things, including sectoral tariffs, will move up the agenda, right? So that would increase the possibility of some of these additional sectoral tariffs being put in place. You also mentioned, of course, that if the courts are not going to be supporting Trump's approach thus far, right? There are clearly other avenues for them to go, and they will be very keen to explore those. So that's, Section 122 of the Trade Act from 1974 that would allow for broader tariffs on countries, but only, if you will, only up to 15% and only for 150 days. Then you have the different routes like Section 232, 301, with 232 and 301 they have used so far as well. It takes a bit longer to get things through there, but that's a possibility. And then they can also think about dusting off old sections, right? So there's obscure Section 338 of the Trade Act of 1930, believe it or not, that has never been used, but could allow them to impose broader tariffs on countries up to 50% and not necessarily with a time limitation, right? So also on that front, there are some opportunities they can explore, right, to push through with this sort of aggressive trade protectionism agenda, right?
No, absolutely, and I think pretty contextual and comprehensive as well. Leif, stay with us. We're going to slip into a quick commercial break here. Just listening to what some of the global macro voices are making of the topic we started with, which is Trump and Musk. And this is Ho-Min Lee, senior macro strategist at Lombard Odier, on exactly that. Listen in. We're back with Leif on the other side.
Initial argument when even before the inauguration was that because Musk is a businessman at the end of the day and has a significant interest in Asia, including China, he might be more of a dove in the internal deliberation on trade policy in the White House. Now, this dispute obviously reduces his influence on the administration's policy, so maybe this could tilt the trade policy in a slightly more hawkish direction. But we also have to acknowledge that, as we have just heard, Trump seems to be quite keen to talk to President Xi directly. So if that's the case, maybe you don't really need the moderating influence of Musk for the time being. Maybe there's a more significant incentive in the White House to continue with these trade talks with China. So in that sense, it's very difficult to predict what the ultimate impact would be. We still think you just have to give it a bit of time, just to see what kind of shift in the trajectory that will take place in the trade policy.
Welcome back to CNBC-TV18 Prime. You're with us here on the Global Reset. I mean, as we took that break, you heard commentary coming through into the implications of the Trump-Musk spat on U.S.-China relations. Now, President Trump and Chinese President Xi Jinping have spoken, and both sides have agreed to meet soon for further talks to resolve the ongoing trade conflict. It was a 90-minute phone call between the two leaders, focused almost entirely on trade. This was, of course, according to President Trump's post. This is CNBC's Eamon Havers with the details on what really went down there.
Long and detailed confirmation now from President Trump on his conversation by telephone with President Xi Jinping of China. The president said the call lasted about an hour and a half. He says they discussed a range of topics, but it focused almost entirely on trade. He says there should no longer be any questions respecting the complexity of rare earth products. not entirely clear what that means, of course. But he also says our respective teams will be meeting shortly at a location to be determined. We will be represented by Secretary of the Treasury Scott Bessent, Secretary of Commerce Howard Lutnick, and United States Trade Representative Ambassador Jameson Greer. He also says that he was invited to China and that he invited, in turn, Xi Jinping to the United States for a visit. He says that's something that we both look forward to doing. He says the conversation was focused almost entirely on trade, says nothing was discussed concerning Russia, Ukraine, or Iran, and will inform the media as soon as the meeting is scheduled. So clearly a high-level meeting between these two sides coming up at some point, TBD. Not clear from this statement whether anything at all had been agreed to other than the existence of a meeting and these mutual invitations and gestures of respect from the two leaders back and forth. So you'd have to say a positive phone call here, but maybe lacking some of the detail in terms of agreements or agreements to have agreements that I think some folks on Wall Street were looking for. Also, we got some comments from Xi Jinping to Chinese state media. A couple of things that Xi Jinping said that were kind of interesting. One is he said that Trump is welcome to visit China again. He said the U.S. should cancel negative measures taken against China, and that both sides should enhance their exchanges. He said the two sides should enhance exchanges in diplomatic, economic, trade, military, and law enforcement. He also made a couple of points about Taiwan, which is interesting. He said the U.S. should handle the Taiwan issue carefully, and the U.S. should avoid a very small number of Taiwan independent separatists who are dragging China and the U.S. into a dangerous situation and conflict and confrontation. So while the President of the United States' statement on this call said that it was almost entirely focused on trade, the President of China suggests they did talk about Taiwan, and the President of China issued some warnings to the U.S. side, Carl.
Leif, what do you make of U.S.-China? Because I think that's the big one, right? There's U.S.-EU, but U.S.-China as well. And it's not just about tariffs, really, because it's a more strategic competition. You think this is going to be a long-drawn one, and perhaps, as was being expected, when President Trump took office, will be the main target over the entirety of the 4-year term?
Yeah, I think that's also, I guess, my view on things, right? So I think on the recent, should we say, phone call between Trump and Xi, I think what's also, to me, is an interesting takeaway from that, right? So on the U.S. side, I mean, they talked about, of course, the positive aspects of this call, the focus on it mostly being on trade, right? But China did that and also, added further issues they wanted to bring to the fore, right, in their sort of official announcement on the back of the meeting. Plus, they also said, I mean, the U.S. has to remove some of the steps they've taken already this year, i.e. those additional tariffs they proposed on China, right? So what it also tells me is that China's stance remains firm with the U.S., right? So these are not going to be easy negotiations for the Trump administration over the next 60 to 90 days with China. But, it's a positive that at least they had the call, they agreed to further call visits, etc., right? So at least it has sort of taken some of the heat out of the relationship that we had between the two parties sort of immediately after the Geneva thing, but things that are de-escalated and so escalated a little bit again in terms of the tone between the two. More broadly speaking, as you say, right, I mean, we have to step back and also look at this in a sort of a more longer-term strategic context, right, both in terms of economically, strategically, but also, of course, militarily, strategically, right? I mean, these are the two, should we say, competitors at the global stage, right? And the U.S. wants to protect and secure its position going forward, right? China, of course, in the same fashion, right? And so that also calls for, these trade negotiations will have to go well beyond tariff, right? They have to look at broader issues that are important for this strategic development for both countries, essentially, right? So yes, there might be sort of shorter term wins on certain tariffs for certain sectors along the way, right? But as we know from the past, securing trade agreements, more comprehensive ones, and then if you add to that in terms of the relationship with China and U.S., a broader, shall we say, strategic considerations, right? I mean, should we say, negotiation, if you will be ongoing for several years, and I mean, I would say almost perpetually, in a way, between these two parties, right? It's not something that would very easily get resolved in a matter of months or even years, for that matter.
Yeah. Leif, let's come to India. By the way, we just got the monetary policy decision. It's a bazooka. It's a 50 basis point cut. It's a 100 basis point CRR cut. A lot of the front loading has happened, and RBI really pushing the pedal on growth, full throttle. Of course, those tax cuts which were announced in the union budget also start to kick through the system. Growth numbers have been positive. There is this China plus one as a theme which investors talk about all the time. And of course, markets here, equity markets have done very well. What's the view on India, Leif?
Well, I mean, so first on RBI, I guess they surprised most people by delivering a 50 basis points cut, right? There were not many people who had expected that. I guess they ultimately just wanted to front load the easing they had planned, right? They also, at the same time, changed their stance to neutral, right, for accommodative, right? So it doesn't necessarily open up the door for consecutive cuts in interest rates from here in RBI's case. But nevertheless, I mean, I think there certainly is more in the pipeline. At least another 50 basis points would be our view on that front. Yes, growth has been holding up, right? But there are external headwinds as well. We think there's room also when you look at the inflation picture, right, for further should we say, cuts in monetary policy in India's case, right, to sort of safeguard against some of these external headwinds that will still impact India, even though not as much as the more externally driven economies, right? Again, looking more medium, longer term on India, right, I would still say that India had the same strong attributes in terms of key drivers of growth, not to belate the point, but of course, demographics, right? But more importantly, there's still, should we say, scope for convergence significantly, right? There still is a lot of room to improve things by addressing infrastructure, by continuing to push on some of the much needed structural reforms still when it comes to labor, when it comes to land. And then I think also you mentioned China plus one. I mean, can India benefit from that? I mean, I would say absolutely, right? But I think it's also important to be realistic about how quickly that can happen, and secondly, at what should we say level of the value-added chain it can happen at initially, right? So I think it will naturally happen over time, partly because China is moving up the value-added chain. It's not, should we say, commercially viable to produce certain manufacturing goods there. It would make more sense to do it in other countries, including in India. And of course, you then also have the geopolitical considerations, right, and the need to diversify supply chains on the back of that. India there sits fairly well geopolitically, and would also benefit in some sense from the diversification on that front. But I think it will be important, right, for India to continue to push some of these structural constraints out of the way. Infrastructure, as I mentioned, was one of them, right, to help facilitate the build out of the supply chain in India, the global supply chain in India. And also in that context, I would also say build up, so we say, a part of the supply chain that's of course meant to feed domestic demand in India, right? Which is a big opportunity as many businesses see it going forward, right? And a clear relevant substitute for China, you can say, right? So I think overall a fairly, I would say, constructive strategic view I have on India macro, including when it comes to some of the supply chain build out. But as I said, it would take a while for India to move up the value-added chain in that front, and then more broadly to see a proliferation of shall we say, the supply chain on the back of this.
Yeah. And I think that's well put. Leif, last question, and briefly, if you can explain what you mean by this line in your presentation. You say yesterday's policies and tomorrow's tech are at odds.
Yeah.
Could you briefly explain what you mean by that?
Yeah, so first of all, it's just one of those, sell-side headlines that are supposed to grab attention. Right? But behind that, what I mean is that, of course, we've seen a proliferation of what I would call, yesterday's or yesteryear's policies, which are, industrial policies are becoming more prevalent, right? Now we're seeing more protectionist policies through, increases in tariffs. There's also more inward-looking policies, including in the U.S. when it comes to immigration and those sorts of things, right? And those are what I would sort of refer to as yesteryear's policies that are now seeing more of a renaissance, if you will. And that is not good for growth, right? It's not good for productivity, right? You would, in a sense, hurt competition within countries that are building up tariff walls, right? That would reduce competitiveness. That would reduce the dynamism within these economies. You increase cost of doing business, et cetera, right? So that's not a growth positive. And that's at odds with tomorrow's tech, right? Which essentially is quite the opposite, right? Proliferation of tech continued, and of course, more recently, AI promises to deliver, she would say, more productivity-led growth, and she would say improvements on that front. And that's kind of where the two are colliding, right? One is sort of looking back, and one is sort of looking forward. And I would hope there'll be more of a forward-looking bias, but unfortunately, that's not the case at the moment.
Yeah, no, absolutely. I mean, industrial policies were scoffed at, right?
Yes.
Even 10 years ago, but they are mainstream. People are saying, well, they are necessary, very much necessary, and I think the Western world is leading the charge here. I think we could have sort of gone on about this one a little bit longer. I wanted to, but we're out of time for this one, Leif. It's a real pleasure to have you on the program, and I hope we can do this more often. Thank you very much for joining us with that perspective. Excellent chat. Well, thank you very much for staying with us. It's a wrap on this edition of the Global Reset. Thank you for watching. Stay tuned. More programming coming up on CNBC TV 18 Prime.